Only a few days before the start of a new year, and even fewer days before I was going to post this original YouTube video, the IRS announced a delay for the implementation of the $600 1099K threshold. And whether you know what that means or not, I recommend that you watch the rest of the video because it's something that's going to affect almost all of us who sell on any kind of online platform. And as of right now, the only thing that's going to be different is when I say 2022, that's actually going to apply now to 2023. And there are other things that could change between now and then. There's an organization called the Coalition for 1099K Fairness, and it was founded by eBay, Etsy, Mercari, and other online platforms to push back against the $600 threshold that was lowered from $20,000, which I'll talk about in a second. And they say it's to alleviate the burden that's going to be imposed on millions of Americans, but really it's going to be a huge burden on the platforms as well, so they don't want it either. So time will tell to see if the $600 threshold gets increased, but as for now, it's the same and it's just delayed by 1 year. With all of this talk about the IRS lowering the 1099K threshold to $600, a lot of people are asking, does this mean I'll get a 1099 from PayPal, Venmo, Cash App, or Zelle that includes my personal transactions? In other words, is the IRS going to tax that non-business income? And the answer is no, at least not on purpose, but there may be some extra steps you need to take to ensure that they don't. Hey, my name is Mark too, and I'm a CPA and online reseller who specializes in helping resellers and online businesses with taxes and with growing their businesses profitably. And if you haven't yet watched my video on the new $600 1099K threshold, it may be helpful to check out that video as well. In summary, any profit you generate as part of a side business or even any income that you make as part of a hobby is typically taxable, even if you don't receive any type of 1099 for it. Legislation in 2021 reduced the threshold at which payment processors are required to report your income to you and to the IRS, and that threshold takes effect for the 2022 tax year. Prior to 2022, the threshold was for sales or processed transactions exceeding $20,000 and over 200 transactions. But now the threshold has dropped to just $600 regardless of the number of transactions. So if you have sales of $601 on eBay, let's say, during the year, eBay is required to send you a 1099K and to report it to the IRS. So if the IRS doesn't see an amount equal to at least $601 reported on your tax return, they'll be following up with you. One of the most common questions I've been getting is, what about all the personal transactions I have on PayPal, Venmo, Cash App, Zelle, and so on? Will these transactions be reported to the IRS and taxed? Personal transactions are not taxable and they should not be reported on your 1099K forms. However, I predict that it's going to be pretty messy and there will be many instances where personal transactions are incorrectly included on your 1099s and reported to the IRS. And I'll talk about what to do if that happens in a second. When I say personal transactions, I'm referring to money you receive for things other than for goods and services. For example, maybe you received money from a friend or family member as a birthday gift, or money from a friend who's paying you back for the dinner bill you picked up for them, or maybe you collected money from friends pitching in for a group gift for a baby shower. There are a lot of ways you can receive money that are totally unrelated to a taxable business activity. Now let's briefly address each of those money transfer options I mentioned one at a time. PayPal has both personal and business accounts, and within each of those types of accounts, you usually have the option to designate your payments as either goods and services or friends and family. So it's not as simple as just sending 1099s to everyone with business accounts, but rather PayPal will send you a 1099K for all transactions designated as goods and services, regardless of whether you have a personal or business PayPal account. So why not just designate all of your business transactions as friends and family so the IRS doesn't know about it? Oh, I don't know, let me just consult my tax crimes handbook. Here it is. Any person who willfully attempts in any manner to evade or defeat any tax imposed by this title shall be guilty of a felony, and upon conviction thereof shall be fined not more than $100,000 or imprisoned not more than 5 years, or both, together with the costs of prosecution. So it's not worth it. And will the penalties be that severe in your case? Probably not. But as they say, it's a slippery slope. Rather than spending your energy trying to hide legitimate business transactions or evade taxes, do something completely legal like joining my tax-deductible reseller tax academy, which will help you avoid taxes. Evading is illegal, but avoiding is legal and refers to things like maximizing your legitimate business deductions, setting up your business structure in such a way that you're taxed less, employing your kids to avoid payroll taxes. Those are all examples of tax avoidance, or what I like to call tax optimization. Now, my course, Reseller Tax Academy, is going on sale January 24th for the lowest price of the year. Click the links below to learn more and to be notified. Okay, now let's look at Venmo, which is owned by PayPal. Venmo also has both personal and business accounts. Even if you're using a personal account, if the buyer tags that transaction as a purchase payment, then it'll count toward your 1099 threshold. And all payments sent to business profiles on Venmo are tagged as purchases automatically and therefore considered to be for goods and services and therefore go toward your 1099 threshold as well. So regardless of whether you have a business account or personal account, Venmo is going to send you a 1099-K based on all the transactions that have been designated as purchases. Now, Cash App has both personal and business accounts, but it looks like they're operating under the assumption that the business accounts will be used strictly for business and the personal accounts strictly for personal. They've announced that the 1099-Ks will only be going out to those with business accounts that have 600 or more in sales. Now let's talk about Zelle. The first three services we talked about are what the IRS calls payment settlement entities, or PSEs, and they're subject to the 1099-K reporting requirements. The Zelle network is more of a bank transfer system and according to them does not meet the definition of a payment settlement entity and is therefore not subject to the requirement to send you a 1099-K and report to the IRS if your receipts exceed $600. And this comes directly from their website. Zelle does not report any transactions made on the Zelle network to the IRS, even if the total is more than $600. The law requiring certain payment networks to provide Forms 1099-K for information reporting does not apply to the Zelle network. If payments you receive on the Zelle network are taxable, it's your responsibility to report them to the IRS. If you have any questions about your tax obligations, please consult with a tax professional, which is sort of what you're doing right now. I've been seeing a lot of buzz out there about the Zelle loophole.
What's the Zelle tax loophole?
Meaning that since Zelle does not report your activity to the IRS, it can be used as an alternative to shield your business transactions from IRS detection. Again, tax evasion is not legal. You can still use Zelle for business payments as long as you still report those transactions and you're not doing it with the intent to stay off the radar. Now, what the heck are you supposed to do if you get a 1099-K for personal transactions? Let's do an example. Say you get a 1099-K for $10,000, but 25% of that, or $2,500, are personal transactions that somehow got mixed in or incorrectly labeled as business transactions. There are three main ways you could go about this. You could request an updated 1099. And though this may be the technically correct answer, it sounds extremely painful and is probably very unlikely that you're going to get PayPal, Venmo, or Cash App to accommodate this type of request. And if they do, my guess is that it's a long and drawn out process that's likely not worth your time. And if the company doesn't fix the error, that leads us to option number 2. When you report your business income on your taxes, simply exclude reporting the personal transactions on your tax return and list only the $7,500 of true business income, along with all your business deductions. To explain the missing $2,500, you can attach an explanation to your tax return describing the reason for the discrepancy. Much of the time, however, the IRS doesn't read supplementary explanations or isn't satisfied with them, and you'll end up getting a letter from them anyway. So in 6 months or a year or maybe even 2 years, you'll get a nice letter from the IRS saying that you failed to report all your income, and they'll likely be requesting the tax that they think you avoided paying on the $2,500 you didn't report, with penalties and interest on top of that, of course. The next step is to write potentially another letter back to the IRS explaining that the $2,500 excluded belonged to personal, non-taxable transactions. Then typically that letter will get lost in the IRS black hole, and they'll likely send another, slightly less friendly letter, again requesting payment, at which point you'll resend your letter hoping it gets to the right place. If you're lucky, they'll get it and the issue should be resolved, and that'll be the end of it. Or they might send another follow-up letter asking for proof or support of the personal transactions, which you may not even have. Eventually you'll resolve it, but if you can't tell, I'm not a fan of corresponding with the IRS this way because it's such an inefficient use of time. The simplest way, in my opinion, to deal with the issue of having your personal transactions reported to the IRS as business transactions would be this. Report the full $10,000 as income on your tax return and simply deduct out the personal transactions so that your net sales equals the $7,500 of business transactions that it should have been. And then you can deduct your regular business expenses on top of that. Now, is this technically correct? No, but neither is it correct that the IRS is expecting you to report a number that doesn't accurately reflect your business income on your tax return. So perhaps this is a case you can share with your mom where maybe two wrongs do make a right.